What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, we have a special request video for you, all right, from Saba in the Discord channel. So, shout out to you. I appreciate the suggestion, all right? It was a very good idea. The question is, on day 3, how do we know if we are looking for a long trade or a short trade? Are we going to be buying or selling on day 3? All right. And obviously, this is an important question. This is an important subject to go over and to understand. All right. So I'm hoping with this video, we can make some sense of this together. All right. We do have a simple daily process that we stick to, that we use, all right, in order to bring, you know, to bring some consistency to our trading. All right. We want to use the same simple process every single day. The more simple it is, the more repeatable it is, the more consistent your trading will be. Okay. Now, the most important thing I can tell you is that when it comes to trading on day 3, you want to see very clear price action. Okay. You want to be able to see what is going on. It should be obvious to you. Okay. The trade is either going to be there or it's not going to be there according to the simple daily process. And if it's confusing, right, if it's not very clear to you, then skip that day, because I promise you this, at some point there will be an obvious trade. Okay, there will be a trade that just jumps off the screen at you and you will know. Okay, but if you don't know, if you're questioning it, if you're having to think about it a lot, don't take the trade. Just wait. All right, because there will always be another best trade setup. All right, so on day 3, the trade day, okay, and this is the daily process. We will, of course, mark off the previous day's levels and the current day's levels. And once we are at a level, we can zoom in on a 1 minute chart to inspect the behavior of price and look for possible entries if everything goes according to plan. In this example chart, we are working the high going into the New York session, right? We have broken out of the London high, so we are at the high of the current day, and we've also broken out of the previous day's high. We can see the lower low on the inside that was put in place in the London New York gap time, right? And we also have the Tokyo lows. Either of these could be the anchor or the target of the pump and dump in New York from the high of the day to the low of the day levels. All right, now the daily process is that easy. That is the daily process, okay? Marking off the previous day's levels and the current day's levels, all right? And sometimes we will be marking off the most recent high and low range, right? In order to ask ourselves the question, are we working the high or are we working the low? Stacy's always asking us that. Are we working the high or are we working the low? And this should be obvious to you, okay? Now, you can see here we have marked off the previous day's low, the previous day's high, and the previous day's closing price is that yellow line there on the chart. Now, when this day first opens, you can see we dump down in Tokyo, putting in a low of the day level, right? And then trading higher into London. London puts in a high of the day level, right? And then dumps down in the gap time, back down to closing price. Right? And remember, we are looking at this structurally. I'm not telling you that this is going to happen on day 3, that London is going to dump down to the closing price. Okay? We are just looking at this structurally. Right? Now, from Tokyo to London, right, we were moving higher, which means we were putting in higher highs and higher lows on the way up. And then suddenly, London locks in this high of the day level, starts trading lower, breaking levels to the left. Okay, this is our potential lower low on the inside. Now, we always say the lower low is the setup for the pump and dump. Okay, so if this is our potential lower low on the inside, okay, that means that from this lower low, we are going to pump up. And this low is going to become the anchor for this pump up, okay? And then when we dump, we are looking to take out this lower low on the inside. Stacy says the lower low on the inside or the higher high on the inside is the gift, right? And that's because it can alert us to the direction that the market wants to move in, okay? So another thing is when we mark off these levels, the reason why we mark off these levels is because there is money sitting at those levels, all right? Above the previous day's high, there are all sorts of orders there, right? People might already be in trades and have their stop losses there or their take profits there. You know what I mean? Other people have pending orders, right? Some people have pending orders that tell them to sell when we hit that level. Other people have pending orders, breakout traders, right? Who are aiming to buy that level thinking that we're just going to continue higher, right? So there is money sitting above those levels. Now, when I say we might mark off the current day's levels, okay? That's the most recent high and low. So you see, we have a recent high in London before the New York session, and we have a recent low in that gap time. So here's our high, here's our low. When New York opens, we ask ourselves the question, are we working the high or working the low? All right? And in this case, obviously, we are working the high. We have broke out of the high of the current day, broke out of the previous day's high, okay? And then pull back and then push back into that level and then trade a little lower, then pull back into that high of the day level. You can see, right? The three peaks, 1, 2, 3. So we are working that level, okay? Working into the high for the dump, right? The pump and dump. Now, we are going to look at several real life chart examples, but I want you to keep this as simple as possible. I am going to mention perhaps places where I might have considered entering the market, right? But this video is not about entries. It's about the structure of this chart, okay? You don't need to read these things candle by candle in order to understand if you're targeting a short trade or a long trade, all right? When it actually comes down to the entry, that's when we might zoom in and inspect price candle by candle to determine, a good place to enter, right? But other than that, we need to be thinking about this structurally. So here, we're looking at the US dollar and Canadian dollar. Monday, Tuesday, Wednesday, Thursday, Friday. You can see here that on Tuesday, we break out of Monday's high of the day level. All right. So this market has broken out of the current week's high that was put in place on Monday. All right. Then begins to trade lower, closes lower. Day two breaks Tuesday's low. Wednesday breaks out of Tuesday's low. And when that happens, that confirms day one as a false break at the high of the week. Okay. Just because this market broke out of Monday's high and then closed lower doesn't mean it's a false break. Okay. Because what does the market do? The market only does three things. It's going to break out and then pull back. We don't consider this a false break until the second day breaks the opposite side of the daily range. So when a daily low is broken, right? So we break a daily high. The next day we break the daily low, and that confirms day one, day two, and then Thursday becomes day three, our potential trade day. Okay. Now, this market put in this new high and then started trading lower, putting in lower low, lower high, lower low, lower high, lower low, and then closing the day. All right. So we have put in a lower low. If we are going to continue lower, right? If we're going to continue this downtrend or whatever, we are going to be expecting a pump and dump type of trade. But we're not going to automatically just sell it the next day when New York opens, right? There are certain things on the day that we want to see. And that's what we're discussing in this video. The certain things that we want to see on the day that let us know to enter short or to enter long. All right. So let's take a closer look at Thursday. All right. And now we're still on a 15-minute chart. We're not going to go much lower than that in this video just to show you that you don't even need to. You know what I mean? You don't need to go in any lower. You can use these higher time frames for your entries, for your stop losses, for your targets, okay? But now let's talk about the daily process, all right? And try to break this down. So what I'm going to tell you here is describing the daily process, okay? On the day 3, we will mark off the current day's high and low. In this case, the Tokyo low and the London high. Okay. Our most recent high and low is the high and low range from the London session. Okay. Just before the 8 a.m. New York Open, we pump up through the London highs and into the previous day's high of the day level. The market puts in this M formation here. We engulf the middle structure of that M pattern at the high of the day, and that low of that middle structure qualifies as a lower low on the inside. Okay. Now, if we look back here, we can see where we are, right? In reference to the previous day. We are breaking through the previous day's high of the day level when we come to this time just before the New York session. All right. And you can see how many times we have pushed up into that high, all these wicks up here. Okay. We are working the high on day 3. Right. And you can see that from down here in this Tokyo low, we have all this space. Right. We talked about building the house, right? We're going to build the wall, build the roof, and then build the other wall. Okay. So we have this space. We have this low as a potential anchor. We have this low as a potential anchor. All right. And that's the daily process. We're seeing, are we working the high? Are we working the low? Here, we're still looking at the US dollar, Canadian dollar. All right. Now, this slide here, I'm just showing you that in general, the market is making lower lows in a downtrend. All right. The easiest way to know if you're in a downtrend is that the market is moving from the top left-hand corner of your screen to the bottom right-hand corner of your screen. Okay. That means the market is in a downtrend. We are breaking daily lows. Okay. Putting in new lows. Those lows in a downtrend are considered weak lows because they are broken through as we create the next lower low. And these lower highs are considered strong highs because they should not be broken on the way down to make lower lows. All right. Now, this Friday closes lower, all right, putting in this lower low. But the next day, we do not get lower lows. We get an inside day, all right? And the inside day for us with Stacy's system is a signal day. So while you might not be counting out day 1, day 2, day 3, all right, you have a signal day. The next day is the potential trade day on Tuesday. So here's our inside day, all right? We've marked off the low. We've marked off the high of that inside day. Okay, that's the daily process. Okay, we're marking off the high, marking off the low, right? And then we can zoom in and mark off the current day's high and low. Okay, and our current day's high and low is this uh, Tokyo high, London low, but then here in London We break out, putting in new highs, all right? And you can see that this sort of trade begins before the New York session takes off, right? But we have broken out of the high of the inside day here, traded lower. We've dumped down here into the London session and then traded higher, breaking out of that previous day's high once again and also breaking the current day's high, right? So we are at the high of the day, past the previous day's high, so we're in breakout. Okay, that's what triggers us to watch this market, and you can see this M pattern on this 15-minute chart right here. Okay, then we engulf that middle structure. Bam, New York opens, we coil sideways for a bit, throw this nice pin hammer, and you're in the market. Okay, and off to the races. This is a picture perfect template of the false break of the inside day type of trade. Okay, now here we're looking at the US dollar Japanese yen, right? And you'll see here that we have had 3 days of breakout traders in the market short, right? Friday is our third day of those breakout traders. Now, with this type of setup, 3 days of breakout traders in the market, we could get that trade on the day 3, okay? Or it could happen on a day 4, okay? It could happen the following day, right? But in this case, you can see on Friday, if we mark off daily levels, we have the previous day's low marked off. We could mark off the previous day's high, right? But we can see that in London, we have broken out of the previous day's low. And once that happens, you can feel comfortable to drop to a lower time frame, like a 1-minute time frame, to inspect the behavior of price at the level. But here we're on a 5-minute chart, okay? Now, you can see, using your imagination, all right, we're still on a 5-minute chart here, but down here you can see with these 4 candles at the low, right? We go down, then go back up, then go down again, and then go back up with that last green candle down there. That's our W pattern at the low of the day. Okay, this market is in breakout at the open of the London session. Okay, we've already broken out once, pulled back, broke out again, W at the low of the day. We engulf and go higher. We start breaking these levels to the left, all right? And you can be in this market comfortably, all right? Taking it higher for that day 3 of breakout traders in the market. We are working the low for the trade higher. We have 1, 2, 3 pushes down into that low for the reversal trade, okay? Now, here we can see that on Friday, when this market closes, we have taken out the low and then closed higher. This is a potential first green day type of trade. All right. Now, this that we're going to talk about here is a little bit different. All right. But if we have a first green day signal day, then we know we're looking for a dump and pump type of scenario to go higher the next day in whatever session you're trading. All right. Now, if we look close on that Monday, right, we have this higher high from the day before, right, when we gave that higher close. Tokyo trades lower, reverses, starts going higher. London breaks out of the current day's high, right? Then we continue to trade higher, breaking out of the previous day's high, going into the New York session open, all right? The market opens, we dump down through these levels to the left, all right, back into the previous day's high of the day level. All right, so we have broken out, we pull back on that level, the market engulfs. Okay, we get a reversal pattern down here. If you could zoom in on this wick on a smaller time frame, like a 1 minute or a 30-second, you would see a micro W pattern down here, right? So we take out these little levels to the left, trading back into London. This is what Stacy calls a stop hunt. All right, this is a stop hunt. We're trading back into the trend or against the trend. Okay, for anyone who entered this market a little late here in the London session, we go down there, pick up those orders, and continue higher. All right. Here we're looking at Bitcoin, and this is going to be the last chart that we look at. All right. So you can't see it in this picture, right? But we had some recent highs to the left that are shown by this yellow line across your chart, right? Higher time frame highs. So we have broken out of those highs on Friday and on Monday and again on Tuesday, right? So we've broken those highs. We get a first red day while we are up high, right? Because we've broken previous highs, then we get a first red day, right? So the next day, we would be looking for a pump and dump type of trade to continue going lower, but we don't get that. Okay. This market actually closes Wednesday as an inside day. Okay. Then Thursday pulls back in the New York session, pulls back into those levels from the previous day, and then dumps down, breaking out of these lows. Okay. Breaking the low of the day level and putting in a lower low. All right. So there's our first red day. We pull back, right? Pull back and then dump, putting in a lower low. So this market was putting in higher highs, right? You see Monday broke Friday's high. Okay. So we were breaking highs. Now we're breaking lows. We're putting in lower lows. Okay. Then we come to day 3, Friday. Remember, Wednesday and Friday are always day 3 of the weekly template. Stacy doesn't trade the weekends, even on a market like Bitcoin that's open 24/7. Okay. We disregard that. Friday is day 3. When we come to our charts, we're going to again follow the simple daily process. We're marking off the current day's high and low range prior to New York. Okay. And we could mark off the previous day's low and the previous day's high. Okay. That's fine. Right. But this lower low, if we're going to continue lower, this is our lower low. This is our anchor for the pump, coil, and dump. All right. So when we mark off the current day's high and low, we have our Tokyo highs and our London lows, right? And remember, we're marking this off to ask ourselves, are we working the high or are we working the low when we come to the New York session, all right? So New York opens and we break out of the current day's high and low. We pin into the highs, engulf, and continue lower until we blast through the previous day's low, which was our previous lower low as we continue that downtrend after the first red day, okay? Otherwise, if this market was going to go higher, all right, and take out this high rather than take out this low, we would be working into the lows. Instead of up here working into the highs, we would be down here working into those London lows or possibly working into the lows from the previous day, right? Breaking out of there and putting in a reversal pattern to go higher. But as it is, we are working the high, breaking out of the current day's high as we go into that New York session. Okay. Again, we're on a 30-minute time frame. If you could zoom into a lower time frame, you would see in that wick somewhere there's a reversal pattern, like an M pattern at the high of the day. Okay. Or a head and shoulders pattern, maybe on a 1-minute time frame or something like that. Okay. Now, also the wick of that candle on the downside is a lower time frame, lower low on the inside. Okay, you can see we've been pumping up right here. And then with that candle, we break through these levels to the left, these candles to the left, all right, putting in a lower low on the inside before we pump back up one more time into those highs, working the highs, and then trade lower, breaking levels. Okay, you could get in anywhere here. These are 30-minute candles. All right, so you have plenty of time to get into this market. Right now, I'll give you another little kind of tip here. Okay, because if you go watch some of my older videos, I used to talk to you before we talked about master patterns. We talked about what Stacy says we're looking for. We're looking for a peak formation, followed by a peak formation, followed by a consolidation. And our trades, a lot of the times, come out of that consolidation. And I'll tell you how to trade a consolidation. All right. So we have our peak formation high, a peak formation low. That's our box, right? Price is in a box. Okay. Then on the day, you can see this market is just coiling sideways. It coils sideways through Tokyo, through London, just chopping around, okay, until we get to the New York session. Right? Now we are trying to figure out, are we going to break out of this consolidation to the upside? Or are we going to break out of this consolidation to the downside? Okay. Now the thing is, we are not trying to predict that breakout. All right. We do not trade predictions. That's called gambling. All right. Instead, we need to wait for the market to show us what it's doing. All right. Now, 80% of breakouts fail. That's an old trading quote. Okay. Everybody knows that quote. 80% of breakouts fail. Stacy talks about that quote too. Okay. So while we're in this consolidation, waiting for it to break out, keeping in mind that 80% of breakouts fail, when we first spike through that high, right, a lot of traders might go ahead and buy. They're trying to buy the breakout of this consolidation. Okay. They think we're going to go take out these equal highs over here. Right. But this is a false break of that consolidation. Okay. We're spiking to one side to go the other way. Okay. Now remember this. We coil sideways, spike to one side, and then trade in the opposite. All right. And then we'll go look at the very first slide that I always have in this folder. All right. Look at this. Stacy. This is from Stacy's notebook, right? Sideways coil, spike to one side for the trade in the opposite direction. All right. And there it is. The coil sideways, false break of that consolidation, trade to the other side. All right.